Okay, there we are, guys. We're a minute early here. We had a few technical difficulties this morning. We apologize for anyone who tuned in to the morning broadcast. We're going to try this again. We'll go through the same news update here, you guys. For anyone who maybe missed that initial one, we've got a couple pieces of news. The miners have recovered a little bit from where they were this morning, so there is some good news in waiting, I suppose. And then we'll get into the Q&A session with our good friend Anthony Power here. Assuming the internet holds up, Anthony?
Assuming it does.
Well, you're looking pretty good right now. We'll try it. If we can't make it work today, that's okay. We can reconvene next week, but we figured we might as well try it out. So we'll get right into it here today, you guys. The title of the video, Why Bitcoin Miners Are Crashing. When we put this together this morning, it looked like almost all of the miners were in the red here. I'll bring up a quick screenshot of what I saw this morning when I woke up. You did see some green shoots, so to speak, Anthony, with the Core Scientific obviously has been performing pretty well, and SATO Technologies as well. Any thoughts why those two would be green in this sea of red, Anthony?
No, I mean, things are a bit unpredictable with Bitcoin price lately. The miners haven't totally been correlated, but the news the last few days, the Bitcoin price, dropping down to 62,500 today. It's low. It's starting to recover now, and it's getting closer. It's heading towards 65,000 as we speak. And so, some of these stocks are turning to green now. Not all of them. Probably about a third of the stocks on that screen there are turning to green. But it just shows you that Bitcoin, can be volatile. You just got to probably zoom out on some of these days and then relook at it. But the mining stocks, we know that the correlation since 1st of January hasn't been what it has in previous years. So there's been a little bit of widening between both Bitcoin mining price and Bitcoin price itself. Only about 3 stocks have actually kept up with, are actually in positive territory year to date, and that's CleanSpark, Core Scientific, and TeraWulf. So those 3 stocks are in the green year to date. All the other mining stocks that we cover are in the red still, and some of them 30-40% down year to date. So hopefully we're still in that sort of that zone where we want to see. It's still holding above 60,000, and if you'd have said 60,000 in January, people would have been a lot happier and had took 60,000 no problem whatsoever. But we've been blessed in getting 73,000 3 weeks ago, and people are expecting 73 and above now as the norm. But it's holding its position well. We've got a Hong Kong ETF coming out on Tuesday next week, when they'll be able to start buying Bitcoin for that particular fund. And if you think about where that's located and the Chinese market available there, that could be really, really good for Bitcoin as well. So, Bitcoin price tends to, if it continues to go up, the mining stocks will turn because, it's all about margins and revenues. One thing we also did see was the actual Bitcoin mining difficulty. Instead of going down as it's done in every previous halving, it actually increased, for the first time post a halving. And going back to, late last year and early 2024, analysts were saying that, you could see 30% of the hash rate come offline after the halving because it would be so unprofitable to mine. Well, the Bitcoin price at 65,000 plus and the transaction fees have helped a lot of miners. And so, it's what it's meant some of these less efficient miners have been able to still make profit. However, I think as you'll come on to the next part of this, the hash price rate has dropped in the last few days.
Well, and let's get into that, Anthony. So a couple things going on this morning. There was obviously some negative sentiment in the news, and the hash price was a big reason for that, Anthony, as you alluded to. So we saw a nice little spike here right after halving with the launch of all the runes, the activity on the network, transaction fees were sky high. I think 183 was the highest we saw in this chart, Anthony. Now we've seen that drop back into the 55 kind of expected range, basically half of the 100, 110 we saw prior to halving. So this was extremely beneficial for the miners out of the gate here. I don't think anyone expected hash price to go this high. We were seeing some blocks, 40 Bitcoin rewards, things like that, right? So very beneficial to the miners who were able to take advantage of those early blocks. Now we've seen this pull back to what the expected levels. Obviously, this is weighing on the miner share price as well today, hey?
Yes, absolutely. So, at 50, 55, it's half of what it was pre-halving, and that's where the expectation was then. So what we will see now, the interesting part now is we've just seen difficulty increase again for another 2 weeks. But over this next 2 weeks now, we'll see very quickly an indication of miners coming off the network, because at 55 or 50 cents, the hash rate price there, it's not going to be profitable for a lot of the inefficient miners to mine, irrespective of what they're paying in terms of cost of energy.
For sure. Now, for those of you who have just joined, I see we're over 50 people now. Make sure you get your questions in the comment section here, you guys. We're going to start taking questions right away. We want to get through 3 quick pieces of news. Again, this is a rebroadcast or a restream of this morning's presentation. We had some technical difficulties, so we want to get into those questions as soon as we can here while we've got Anthony with good internet and good signal here. Now, Anthony, next piece of news here I wanted to touch base on quickly. DMG, this is one of the miners that we cover. We were actually just talking about them this week in terms of their immersion upgrades at their facility in Christina Lake here in BC, Canada. But now they've come out and said they're putting together a research report in a collaboration with PayPal focused on the decarbonization of Bitcoin blockchain. This is a trend we've heard from a lot of the miners we cover: CleanSpark, TeraWulf. Obviously, IREN was on the program on Monday talking about how important it is to have that green energy pairing with the Bitcoin mining companies. What do you think of this news and this partnership?
Yeah, I mean, go back about 12 months ago, and there was a lot of discussion about, or even longer, discussion about whether those miners who were able to mine a Bitcoin using 100% green renewable energy, would there be a premium price paid for that? And we're seeing DMG come out now, and they're collaborating with PayPal and with Energy Web. I mean, DMG are, they're an expert in carbon neutral mining. They mine at 100% green energy. They're not the only miner to do that. I mean, you've got to look at Hive Digital as well, and in Canada, Bitfarms. In fact, most of the Canadian miners, that are operating in Canada, are pretty much 100% because of the amount of hydropower available there. So, but this link with PayPal, who focus on the blockchain payment, and then you've got Energy Web, who provide clean energy solutions. And so this is a good collaboration, and the initiative it sets a standard for the environmentally conscious blockchain applications in financial services, and it'll hopefully foster more sustainable crypto ecosystem. So it's a positive move. I don't know to the extent of how much of a premium that people would pay for it, but it's just it's another story to sort of like promote Bitcoin in an environmentally friendly way, and we need a lot more of that. Most of the, all the North American miners are using a significant amount of green energy to mine their Bitcoin. Yes, some are still using some gas and carbon fuels, but we're talking small percentages. So the majority, either close to 100% or very, very much 100%. Some of them can't put 100% because if you're connected to hydropower, but as a backup, you're connected to the grid as well. The fact that you're connected to the grid and you don't use the grid, what it means is that electrons can move through the system there. So, to say 100% is not strictly true. It could be 99.99999% as a real number. But what it means is that these miners are mining Bitcoin in an environmentally friendly way.
Yeah, it's definitely important. It's almost like the wrappers at the grocery store saying 100% organic or almost organic. Coming from Alberta here, oil and gas hub in Canada, Anthony, there's some people that really buy into the ESG. They are willing to pay a premium. Some people aren't, and they just care about kind of the overall profit of the company. But ultimately, I think in this space specifically, there's been so much negative press on Bitcoin miners about their energy consumption and habits. I think anything we can do to show benefits, stabilizing the grid, carbon neutral strategies, carbon offsets, renewable energy, it just goes to strengthen the story, right? Now, especially I would say as pensions and big investment firms get involved, a lot more stringent ESG standards on those type of investors. Now, the next one here talks about Griffin. Now, this was an interesting article this week, Anthony. A number of companies we follow have active ATM programs in the market right now, so issuing shares. Griffin has come out and said they're looking potentially at repurchasing shares, so actually bringing the float down. What was your take on this? Do you think this is a trend we may continue to see in the sector?
I don't know. I mean, it's a novel news update. I mean, we had a similar novel story from DigiHost about a year ago when they said they were going to start paying out dividends to shareholders, and sort of it gets like shareholders excited. Shareholders like this sort of thing, but you're talking about a company that's just under 1 exahash. Wants to grow to 10 exahash this year, and the way you're going to grow is by raising capital. So, for me, it'd be more about raising capital, probably through diluting shares. Will be on their cards. So it's a nice story out there. The bigger story is the fact actually that in 2023 they were able to mine a Bitcoin at $18,200 per coin, and so that's as pretty much as low as it gets. If that's the lowest all-in cost, or if that's just an energy cost, but it sounds like an all-in cost there from Griffin's point of view. So they were making significant profits, and bear in mind they've only just gone public in the last few months. So as a non-public company, they would have been quite profitable going through that period. And they're very asset light. There's only 3 employees in Griffin, so they require on hosted facilities, but it cuts out all that sort of operational costs that you require. They don't need staff at facilities. They don't need significant G&A costs, significant legal costs. So they didn't have to incur the normal amount of legal costs to go public because they did it through a company that was already listed, and so they've made some savings that way. They've got an ambitious target to get to by the end of 2024, and it's an ambitious target. I mean, it's 10 exahash, but you set yourself a target, and if you can get some way, anywhere near close to that, you've achieved something. I mean, from 0.9 to 10, that would be amazing. Bear in mind, IREN in January 2023 were operating at about 1.3 or 1.4 exahash, and finished the end of the year at 6. So, you can get some significant growth in the right conditions. And bear in mind, in these type of circumstances, luck plays an important factor. And, the halving might bring some opportunities for the likes of Griffin to look into. It could be a case of merger and acquisition with another miner. It could be that some distressed assets they can purchase. And so, opportunities will raise themselves going through here, and it'll be, those senior leadership teams that go out there and make the most of those opportunities can really benefit. And we've seen other miners do that. We've seen even likes of CleanSpark managed to get some assets from Mawson, when they were, having cash flow issues there. And other miners have benefited from doing things at the opportune moment. So, that's more of a sort of like the story. I think this is just like it's a feel good factor, and shareholders like share buybacks. But in all essence, to grow in this market now, we've talked about this on maybe 15 podcasts. There's only a couple of levers available for these miners. One is selling Bitcoin, and we know that more than half of them sell their Bitcoin every day. And the other is raising money through dilution. We know that all the big miners who are going, with significant hash rates by the end of this year are all selling shares to get there.
Well, maybe they'll buy some shares back cheap and then run an ATM program and make some money on the other side. Just kidding, everyone. Just kidding. Now, next one. This is the last news article we wanted to talk about here today before we get into the questions. I see CleanSpark coming through in the questions, 2 about Riot. I know Bitfarms we got cut short on this morning. I've actually got my Bitfarms hoodie on here today, you guys, just representing. So we'll talk Argo here quick, and then we can get into the Q&A, Anthony. Argo is not one we cover regularly as part of our analysis, but we're talking about the idea of opening up a few rotating positions just to get some exposure to other companies that you guys are asking questions about. So Argo has now come out with their 2023 full year results. So Anthony, let's take a look at this quick for anyone who's interested in Argo, and then we can get into the question section here, you guys. So make sure you drop those in the comment section now.
Yeah, so Argo, it came to my attention quite early and towards the end of 2020, and they're a UK miner, although they mine obviously in Canada and in Texas. And in 2021, they were one of the sort of like most popular mining companies out there. We talk about the likes of CleanSpark, and we talk about the likes of IREN and Marathon and Riot and TeraWulf. In 2021, you were talking about the likes of Argo and Bitfarms and Hut 8 and Hive Digital, all at the top of their game, all doing really well. So it's been a bit of a challenging sort of 2 years for Argo. They had that debt issue there. They built a fantastic facility at the Helios site, which was energized in May 2022, only to be sold to Galaxy in December 2022. And that was really because they took on debt as the Bitcoin price was dropping, and the machines that were collateralized against that debt were dropping in value as well. So it caused a real problem for them. So debt's been a major issue, and when you've lost your facility and then you're paying a hosting fee and you're trying to earn money as a miner to pay off the interest payments on this debt, that's been a challenge. But there were some green shoots in this update. So, revenues, were 50 million, and although it was a decrease from what they achieved in 2022, bearing in mind they had more hash rate, and the fact that the difficulty factor is in the last 12 months has meant that miners are mining less than half of what they were a year ago. That's part and parcel. The Bitcoin price obviously is better now, so 2024 should be an improvement on 2023, absolutely. They managed to increase the hash rate by 0.3 exahash last year, and that was because of the Epic miners they'd purchased, which were produced with in collaboration with Intel. So Intel not in the market anymore, so obviously machines in the future were going through another provider. But one thing they had to do was they had to start looking at reducing their operating expenditure, and they brought in a new CEO, and they're obviously looking at that in a big way, and they've started to seriously reduce operating costs. And in 2023 they reduced their operating costs by 58% compared to the previous year. One of the benefits of being in Texas was they were able to benefit from the power credits through curtailment. So when they weren't mining, they were still benefiting through selling that energy back to the grid, and that came to 7.2 million. And so, if you look at the loss that they achieved in 2023, they still made a loss of 35 million. But actually, the previous year it was closer to 229 million. So that's a sort of a massive improvement on the previous year. They had a positive adjusted EBITDA of 8.3 million compared to a negative 46.7 million in 2022. So again, you're seeing improvements there. The key thing for me is about the debt. So the debt now to Galaxy has been reduced significantly. It was 35 million in December 2022 when they sold the site. So there was two parts to that deal. They sold the site for 65 million to help pay some of the debt, and they also got a cash loan of 35 million. So effectively like 100 million payment from that transaction. That debt's dropping now significantly, and they've got a small amount of debt to manage. They've also got the notes, the debt and the notes. It's 40 million, which is due in a couple of years. But there are options for that there. So that's not something that they'll be probably focused on. The focus at the moment is to get the Galaxy debt paid for, and that'll reduce their interest payments, which have come down significantly, and that puts them in a better process then to start looking at, in the same way like Core Scientific, how to grow again once you've sort of like gone through a period where it's been a challenging time for them. But there are some green shoots. There was an expectation in the same month that Core Scientific went to Chapter 11. Argo are also going to Chapter 11, so they avoided that at the 11th hour. They actually published the notice in preparation for going there, but they had an 11th hour saver in the form of Galaxy Digital, who sort of like came out and helped them out the hole there. But it meant that they lost that fantastic site at Helios, a 200 megawatt facility, all immersion cooled. I was with some of the Galaxy team a couple of weeks ago at one of the conferences, and they were telling me all about how good the site was, and they've had no issues there like other sites with. We've talked about Riot and some of their immersion cooling issues they've had with their facilities going down for like 12 months. But the Helios one looks like it was built well, and it's managed to get through the challenge that way. But green shoots for Argo, and hopefully we'll see that continue. But it's going to be a challenge. The halving means half the revenues. Still got the same costs, so the costs will still be doubling after this halving. So time will tell how long they've got.
Yeah, it will indeed. That was Galaxy Digital calling me, Anthony. Just wanted an update on the debt while we were going through that. Hey, thanks for walking us through the Argo update, Anthony. Let's get into some Q&A here, you guys. So the first one, you were talking about Core Scientific. Their daily production, Anthony, is at 19.6 for yesterday. So it came off kind of that 30 range we were seeing pre-halving pretty significantly now. How are you feeling about the daily production? Obviously, we addressed some of this in the intro here. However, Bitcoin price is still a lot more favorable than many of the analysts had predicted going into halving. Do you think there's any concern by these big miners about the daily production at these levels, or not hitting the panic button yet?
No, they won't be hitting any panic button for a while on these numbers. I mean, bear in mind they were doing 28, 29 pre-halving. That takes it down to 14 to 15 as a maximum. 15 would be a maximum based on the hash price, right? So 19.6, and what we seen yesterday was at 25, and they had 57 the day after the halving. Let me tell you now, Core Scientific are leading the race in April for the most Bitcoin produced for the month. And unless Marathon can really start picking up, they're at least, I'm going to say 30, 40 Bitcoin behind at the moment. And that's going to need some hash rate to play catch up, because, Core Scientific have got nearly 20 exahash plugged in self-mining, and they do this production day in, day out. They don't, these numbers are good every day. They're not like, oh, there's a bad day. These numbers are steady every day of the week since the 1st of January. They've been solid numbers. And that's why they're leading the sort of like the Bitcoin mine production in total. They led it in 2021, 2022, and 2023. And, unless Marathon can get that hash rate plugged in, they might even win it in 2024, which would be amazing, because they've got sort of like 10 exahash less than Marathon at the moment. So I'm quite happy with Core Scientific. Everything they're doing at the moment, they've had their time in Chapter 11. They've come through, and Adam's leading the team there. And, it seems to be just going from strength to strength. Even got time to look at HPC business, bringing in, potentially another 100 million, that wasn't in the original plan. So all that planning in January, we've talked about it before, that's when the Bitcoin price was at 40,000. Now the Bitcoin price is at 65,000. It's a different ball game. So, things can happen a bit quicker. And all it takes is now is, we'll see their earnings coming out around about the 8th, 9th of May. And so, we'll get Adam on the podcast, and, he'll give us an update of where we are then. We had him on the podcast, in March, and it was a great podcast, explained a lot of things. He'll talk more about, the finances, more about the future, because he'll be in a position to tell more. I'm hoping all these extra revenues now are leading to something else that, they can do things a little bit quicker. And, any impact on the share price, because they are doing things better, will make those warrants activate quicker than expected as well. And if the first warrant gets activated, then that debt clears, and it also gives them another 300 million to start investing in building again. So they've been quite, their growth strategy is not as big as some of the other miners, so they're taking their time. They've got some growth strategy, and they've also got some potential big growth strategy that they could get to, but they're doing things in a managed way rather than going out there and saying we're going to get to 50 exahash and at the end of the day pull the plug and say, well, we can't get to 50 now. They're doing it more managed way, so it's more realistic. But nobody can falter what them production numbers coming out every day. That everyone should be, it should be a thumbs up every time we see them, because they're very, very good every day.
Very consistent, and it makes sense. They've got a little bit more conservative approach to growth now, right? Maybe extended themselves a little too quick and got into some trouble last time. Now, we've had a number of questions about Bitfarms. We tried to discuss them on Wednesday, had technical issues, tried today, technical issues. Now we've got, at least right now, a good internet connection. So when will the Bitfarms interview come out? So what's going on with Bitfarms? There's a CEO transition, and there was some current concerns about a ban in Paraguay. So we reached out to Ben. He's actually going to the conference in London, and the AIM conference next week with Anthony. So we're going to try and link them up in person and do the interview that way. In terms of Q1 interviews, we've now scheduled 9 of the companies that we cover in the first 3 weeks of May. So we're going to have essentially a Q1 earnings interview daily for you guys. We've scheduled them 1 per day, so you only have 1 per day to worry about. That's going to be coming out really starting at the start of May. That's going to be a very big quarter for these miners, as it's the last one pre-halving. Plus, we had the all-time high Bitcoin prices in there. So should be very favorable. We've got the new accounting treatment, a lot of benefit for these miners. So we're on top of that. And we've now launched our podcast on Apple, Amazon, Spotify. So if you want to pick this up while you're driving or working out or whatever you do in the daytime, that's another great alternative as well. But speaking of Bitfarms, Anthony, I've got my I keep doing the wrong side, Bitfarms shirt on here. Favorite hoodie, you guys. I've got a lot of swag from these miners. This is the #1 hoodie. I'll say kudos to whoever designed this one for you, Bitfarms. Anthony, what is your take on this company? 2023 was definitely a struggle. We had Ben on for a very powerful interview. Spoke to us about the mining metrics being some of the best numbers they've seen ever in this sector. Where do you stand on Bitfarms these days?
Yeah, I'm pleased with Bitfarms now. I mean, 2022 and 2023 were challenges for them in terms of, they had this debt mountain, I think in sort of June 2022, which had totaled $160 million. They made some mistakes. I mean, all the miners have made mistakes, but Bitfarms have made some mistakes. They bought some Bitcoin in January 2022. They ended up selling it at a loss because, the expectation is you buy some Bitcoin to increase your hodl and hope the price, naturally increases over time. And it didn't. It kept going down, and then it put them in a position where they needed to raise cash to pay for, interest on some of the loans they took out for mining machines. And so it was just like one thing after another. So they got this mountain of debt of 160 million. They had to come up with a plan of, we're going to have to start doing things totally differently. So it put the sort of hold on any sort of growth. And if you look at the last 18 months, we're not seeing any significant growth. I mean, I was sat 2 years ago at this conference I'm going to next week. I was sat in the conference 2 years ago with Ben, and we were talking about the growth projections for 2022. And at that point in time, they were looking for 8 exahash, when things were a little bit rosier. And after that conference, sort of getting into the May, that's when things started to come to light about the debt that Bitfarms had acquired, about the debt that Argo had acquired, about the debt that Greenwich Mining had acquired. So there was, I put together an article about the debt period there, and it was really, a challenge for some of these miners. But one thing you can say about Bitfarms is, they kept to their word. Their word was, we're going to get rid of that debt, and every month they kept to the target, and the target was always going to be clear the debt by February 2024. And in February 2024, we've got a 0 balance of debt on the balance sheet. They've got some, I think they had 66 million of cash at the end of March. They've got a Bitcoin hodl at the end of March that was again at 60 odd million. So, 120 odd million dollars in the treasury ready to use. The growth strategy now they've got no debt, and they've got these facilities in Argentina and Paraguay. You can see the growth strategy come into play there. They're going to have some significant mining facilities in Paraguay. They've got one exahash at the moment in Paraguay. they're going to have close to 8 exahash by the end of the year. So that's literally growing the size of the company at the moment, again, just in Paraguay. And
But
they've
are
got
you
another
worried
7
at all
exahash.
about the mining ban, Anthony? I know you spoke with Ben. We've seen a PR from the company.
Ben quashed that one during the podcast, so that's been put to bed now. In fact, there's even been articles now, and I saw something the other day again about licenses being issued for mining companies to operate there. It was all about the illegal mining, and the thing is, because Bitcoin is at such a great price, this happened in China and a lot of other countries where people were just tapping into networks illegally to mine Bitcoin, and they've been found out. And in China, they were like, if you got found out, you'd be obviously punished, and the machines would be destroyed. And similar in other countries. Well, we had some in Kazakhstan where there was illegal mining, and so inevitably it will happen wherever there's an ability for someone to tap into the grid. And it happened in Paraguay. Now, Paraguay sell a lot of they make more energy than the country can actually utilize. So what they do is they do actually sell a lot of their energy to Brazil. Brazil, one of the largest, most populous countries in the world, is on their border. And they're selling this energy to Brazil at about 1 cent a kilowatt hour. So the mining companies have gone into Paraguay and said, hang on now, we can pay more than that. And we want to use as much as you can give us. And so these mining companies are going in and paying significantly more, maybe 150, 200% of that figure there. And, that gives the government then a nice revenue stream, an additional revenue stream that they weren't expecting. And also, when you're transmitting energy from country to country, you're going to lose energy during that transmission there. It's not like, you send, so many kilowatts through and it gets to the other end there. There is energy lost along that route. So for the miners coming in there, it's sort of like a win-win for the country. So Bitfarms have got everything in order. They've got all contracts in place. They are on the list of Bitcoin miners with a contract, and so that's not going to stop them. I mean, people always question some of these countries with the political instability, and in Argentina, with inflation, things can change, governments can change, sentiment can change. I mean, I'm still wondering whether the UK are back in crypto at the moment. Sometimes we, it's like, it's something they want. We getting MPs saying they want to ban it here, and we'd like to think, having one of our citizens invent the internet, that crypto technology would be high on the list in the UK. But it gets, no matter where you are, there's always going to be sentiment against it, and but I think from Bitfarms' perspective, the challenge is growing to that 21 this year. Now, the original hash rate target is about 17 in terms of new miners being added and replacing old miners. But what they're saying now is some of these old miners can still make money. And if you look at Bitfarms' efficiency rate, they haven't got one of the highest. However, if you look at their cost to mine a coin, it's significantly better than some of their peer groups. And if you look at the latest Cantor report, if you look at it and thought of it from an efficiency point of view, you think actually the likes of Hut, the likes of Bitfarms would be costing more for them because they've got slightly older machines than their peer miners. But what Bitfarms have done is they get the most out of their machines. They run them really well. And every month, there's only Hive Digital that can compete with them month by month. In the last 3 years, those two have effectively been 1 and 2 on the Formula One track every month in terms of positioning. And, no matter who's driving, for Lewis Hamilton or Max Verstappen behind them, they're not catching up to Bitfarms and Hive Digital at the moment. You've got
Ben in the F1 car out front, Anthony. Ben got on out front in the race.
Racing Hayden Killett from Hive Digital.
No kidding.
I'll be a commentator on that. I'll be a commentator on that race, no problem.
There you go. I've joked these companies should just set up on the other side of the border with Brazil and start getting the 1 cent power.
Actually, it's a good point, Bryce. I'm thinking about 18 months, 2 years ago, I actually put out my monthly report and did it in a Formula One track in the positioning, how all the miners finished on a Formula One track, just to sort of break the monotony of like a table. But it was quite effective, and we put all the sort of like the logos on the sort of like in the grid positions like that. And I think at the time, I think Bitfarms and Hive were 1 and 2, so they've been very very strong. And if I look at even 2024, there have been some other miners joining the group. Some of these smaller miners have done quite well, but when you look at consistency every month, you won't go much further than those. Probably add IREN into that equation.
Yeah.
CleanSpark were probably knocking on the door, I think, in 4th place in 2023. And not as much in 2024. Some of these smaller miners have done quite well. SATO Technology have done well this year. Griffin Mining have had a good run as a non-public miner, so we didn't use their numbers before they became public. But if you look at some of Rob Chang's tweets, they highlight that the company was performing very well compared to all the miners. So.
Well, and let's get into some of those smaller runs. So, quick comment here. Anthony's cam is back up. Maybe it's the UK government curtailing your internet, Anthony. They're not sure what their stance is on Bitcoin, so they're just cutting you out. Who knows? We're back now, though, you guys. We've got almost 100 viewers here. Let's really hammer the like buttons. Try and get this algorithm working for us. We had 2 technical difficulties. You're right. We did have a technical difficulty with Anthony's cam this morning. But you know what? Better late than never. So we're here now. And Anthony, we're getting a lot of questions, our good old price target questions about Riot. You guys, Anthony and I do not give price targets. That's a difference from us and Sebastian or Tom. We don't do break even. We don't do buy and sell ratings. We don't do price targets. We're an education platform where you can come interact with the CEOs, ask questions, learn about the news, learn about the industry. So I don't know if Riot can reach 40. But I would like to get your thoughts on Riot, Anthony, as they're starting to energize Corsicana, and we've got ourselves a trip lined up to Corsicana in June.
Yeah, so we don't do price targets, but the question there saying, can it reach $40 again? The challenge will be for the likes of Riot, the likes of Marathon, whose share price reached nearly $80 in 2021, albeit for a very short space of time. So we had that little burst during that year where a lot of these stocks really multiplied. I think at one stage, Riot's market cap was 7 billion, Marathon's was 8 billion for a number of days. It wasn't significantly long. To get to $40, bear in mind the dilution since that period in 2021. So you think at them days, Riot had less than 100 million shares in issue. Now they're like 250 million shares in issue. So it would be a challenge to get there. The Bitcoin price would have to really, really rally. But taking away pricing, which we don't do, we can talk about 2024 and how 2023 was a challenge. I mean, the positives from 2023 were really the energy strategy that they introduced. So people, so we're not the Bitcoin miners who should be mining Bitcoin, but actually, the way that Jason articulated this on the podcast, it made people think a little bit more. Actually, it's not just about stopping and selling power; it's about doing things right when the ability to have the best return on offer. And it's not just a case of a quick decision. They have many people in the background who are analyzing this daily, hourly, and making those decisions, real-time decisions as to what's beneficial.
Anthony, what I thought was so cool with that interview with Jason was he explained by shaving off just a few percentage in terms of time, operating time, percentages a day from the peak and the trough of these cycles and putting that back into the grid, it had substantial impact on their average price for the year, eh?
Yeah, they were able to achieve, I think they got it down to like 2.2 cents, their average energy cost. And I did a number of, people can go back through my articles, which I write for Compass Mining, and look at the analysis for Riot in terms of the margins that they were achieving. And I think it was the third quarter in 2023. They were mining a Bitcoin at literally just over $1,000, and the revenues were like over $30,000. So they've had the challenges in terms of production, and Jason's already highlighted that as well. So we know now from March that they have a significant amount of machines that are not performing anywhere near where they should be. So effectively, Riot have gone out and ordered a massive order. They've ordered something like 7 exahash of miners just to go back into the Rockdale facility. And those miners will do two things. One, they'll replace the 4 exahash that they've taken offline. So if you look at the operating hash rate for March, it was 8.6 as opposed to 12.4 where it should be. So that's nearly 4 exahash that they're not using. That's like saying we're not using Hive Digital, the whole of the company. That's about just over 4 exahash. So, that's a significant amount of hash rate for a company to lose. 33% of the hash rate is not being used. So between now and September, they'll add 7 exahash of miners into that facility to get that hash rate back up to 15 exahash. And what they've done last week is they've just gone and energized the largest facility in the world. They've already got the largest facility that's operational in the world, which is the Rockdale facility. That's a 700 megawatt facility. They've just gone one better and just thought, we'll go and get a gigawatt. And, some miners will say, well, we don't want all our eggs in one basket. The Corsicana site is a 2-hour drive from the Rockdale facility. So actually what you've got there, you've got staff who are managing both facilities. Some of the engineering managers are not just managing Corsicana, they're managing Rockdale as well. So actually they're probably saving, an element of labor costs in having, people covering both sites.
So I got to ask Anthony, next question here, we've got a few on Riot.
Yeah.
So we've got all these replacement machines coming, right, to upgrade the ones that are underperforming that Jason told us about. We've got Corsicana energizing. We've also got a share price situation, extremely oversold, a lot of short interest. Share price has been beaten up. Now we've got Q1 earnings coming out. We actually just booked in Riot to get on the channel here. Do you think there's going to be a positive surprise on that earnings report?
I expect the earnings report to be good for a couple of reasons. One, they'll be using the new FASB rules on the Bitcoin hodl. So they've got a hodl of nearly 8,500 at the moment, and so the ability to have that priced in at the price of Bitcoin as it was on the 31st of March, that will obviously make their balance sheet stand out, but also the gain in that valuation will appear in their income statement as a positive, a positive like that. So we know from a self-mining perspective that Riot do things really well, but they've got a hosting business that has been far from great since they took over. And bear in mind, these are contracts that were already there when they bought the facility, a few years ago. So part of the deal was they had to take these contracts on, and there's been quite a lot of litigation with the tenants. Some have been removed. There's still litigation with the biggest tenant there, so that impacts everything. So there's obviously costs incurred, maybe not as much revenues coming in. So you've got a sort of like a profitable business there. The engineering business pretty much runs itself, so it's not making significant amounts, but it makes a margin, so it covers its main costs. But the hosting business, we know now. I still think that they should have a green quarter, but if they don't, there'll be a lot of good information in there about what's happening going through, and we will hopefully we'll hopefully get their I think their numbers come out on the 1st of May, Bryce, and we've got them on the channel, I think, a few days later than that. So it's going to be interesting. We'll actually get their numbers out before we get the April update out. And so there'll be sort of like quite a lot of, there'll be people wanting to see the earnings, like we've got the question here, but there'll also be a group of people saying, how much is actually energized at Corsicana, and how much extra Bitcoin have we mined? That facility that they've energized at Corsicana is a maximum of 3.7 exahash. I don't know if it's all been energized or they're still putting machines in there, but has the capacity for 3.7. The A1 facility, which is the first one to be energized, that's the maximum. So whether they're able to energize all that even by the end of April, so that we know what that means, is that gets them back to 12 exahash, which is where they said. And as they start putting machines back into Rockdale and increasing Corsicana, I mean, bear in mind, they've got a target of 31.5 exahash by the end of the year. So we're going to see every monthly update in 2024, like waiting on bated breath for the next increase. We had this last year with CleanSpark when they were increasing, with IREN last year when they were increasing significant. Every month was like another birthday, because it was like another exahash, another 2 exahash. I mean, CleanSpark added 7 exahash in the first 2 months of 2024. So we'll see these type of increases with Riot. So I think 2024 is a turnaround year for them in terms of getting everything right, everything working. If they can get the weather people out there to make sure there's no big storms or anything like that, pay some extra bucks for a couple of weather people to do stuff out there, that might help or whatever. But I think 2024 will be a good year for Riot.
Yeah, I do too. I feel it's similar with Riot and Bitfarms. I feel both of them have been beaten up a little bit. Both of them have big growth ahead of them. Pretty good strategy and plan to get there, but just don't necessarily have the full confidence of maybe the retail investor base. Now, Hut 8, this is one we got into a little bit on Wednesday, talking about Asher's new leadership. This is another one, Anthony, that's definitely had some challenges throughout the last few quarters. Seems like Asher has come in, made some real decisive decisions out of the gate, shutting down Medicine Hat. They've now built and are starting to energize a new facility in about 3 months from a greenfield lot basically to hashing. So that was pretty impressive, I thought, as well, for a very effective price or rate for what they got. What's your thoughts on Hut 8 Corp now?
In a similar way to the last two months we talked about, 2022, 2023, a real challenge for the old Hut 8. Obviously, USBTC, the other part of that merge, they were also having issues towards the end of before that merger occurred in terms of the cash flow. So, you've got one company that's got access to energy infrastructure in the US, and you have another company who had a significant balance sheet strength compared to literally all the miners. But from a production point of view, from an energy point of view, we're really struggling. So, it was a case of they both wanted what each other had. And so now the new Hut 8 is now based in the US, which will be a positive thing. Asher's he's been in charge a couple of months now, so I think we give him a little bit of time. He's got plans to get things going in the right direction. They've highlighted some good updates there. They're handing some sites back to the Granbury site, back to Marathon with another site, the Kearney site, and that's going to give them about $13 million on Tuesday, which again will be put to good use. And they've got a 9,000 hodl of Bitcoin, which is worth close to getting onto $600 million. So they've got the ability to if things come along opportunistically, to go into that and utilize some of that there. I mean, bear in mind, 2 years ago, Jamie said she wouldn't sell Bitcoin until it reached $500,000. And I don't think she was joking when she told me face to face. That I asked her, when are you going to sell, any at all? And she went, no, when it gets to 500,000. They have started selling some in the last 12 months because they've been selling their production to keep their operating expenses where they are. And also the fact that they couldn't use any, when you're going through a merge like that, you then can't use any ATM or sell shares in the company until the merger. And it was quite a long period. I think it was like getting close to a year for that merger to get full approval from the SEC. So now it's been approved. Asher's in charge. They've got a plan. I think we need to sort of let the plan come out, and I think he's said, look at us in Q3. Don't judge us on the first 2 quarters of the year. Look at us in Q3. So believe you me, we'll all be looking in Q3 for those updates. And I think there's pretty one way. There's been more positive news in 2024 in the first 4 months than they had in the whole of 2023. So that their production per exahash has increased. If you look at I do tables, look at the last sort of 6 months and see it starting to go in the right direction. It's not quite where it should be, because again, they were having site problems, issues at the Drumheller site. They had an energy issue in Canada as well. Those have now been resolved. And so what's means now is, yes, they've got less self-mining hash rate, but it's doing better than the original total hash rate, which they had in place, which wasn't doing great. So they'll start, as they start adding self-miners, they need to look at the self-mining fleet. I know people are going to question that, and I'm questioning that. I'm trying to think when the last order they placed for mining machines, and I was in a space meeting the other night. It might be a couple of years ago. So maybe, and actually said on the call, they haven't bought anything yet. They're looking for pricing. Let's see if we get an order for some new, more efficient mining machines, because they've got some significant size facilities.
Sure. Yeah, it's going to be interesting to see if and when we see a big equipment order out of them. We've got the S21 Pros now out on the market, so I would imagine it's in that neighborhood. Now, I wanted to talk a little bit about Hive as well, Anthony. This is one we didn't get to. This is the oldest publicly traded miner based here in Canada. We've had Aiden and Frank on the program a number of times. Frank Holmes is the chairman of this company. He's one of the most interesting and informed people in the spaces. I always learn something great when I'm chatting with him. Hive is, you've got a long running history with them, Anthony. It's one that you've been working with for quite some time. What are your outlooks on this company right now?
I mean, yeah, Hive, I would articulate it, go back to 2021, Hive were the dominant miner. 2022, they were still the dominant miner in 2022. But what Hive were doing is they were mining, as well as mining a little bit of Bitcoin, they were mining Ethereum on a big scale, with a significant amount of GPUs, and they kept buying GPUs literally right up until the fork occurred, and they were unable to stop. They had to stop mining Bitcoin. I think it was like September 2022. So the margins on Ethereum mining were 95%. And if you think about it, they were earning $6-7 million dollars a month in Ethereum mining, and then after after Ethereum went to proof of stake, it was a case of they had to mine other coins with their GPUs, and the revenues they were achieving post that fork were about 200,000 a month. So that was a severe drop off. Now, what they started to do was then focus on getting the Bitcoin mining hash rate up. And we saw the hash rate for the end of March. It's now at 4.7, probably going to be over 5 at the end of April. I'm expecting rises pretty much every month. They've got machines on order. The target is 8 exahash by the end of the year. And in parallel to the Bitcoin mining, they're now, they've been focused on the HPC side for about a year now, trying to get that process in place there. And they've got 2 facilities that are doing HPC at the moment. So they're growing that there. They haven't got like the big customer like Bit Digital, but at the moment, I think they're on track for. Their plan is to get to 15 million annualized revenue by the end of the year. And I think they're already close to getting to 10 or 12 million as we speak now. So 10 or 12 million is about the same amount of revenues that IREN have currently got from their contracts in terms of annualized revenues. So hopefully we get some more updates from Hive, because they've been looking at this a lot longer than some of the other companies. But there's so many positives. I mean, their market capitalization is quite low. And when you start looking at valuing a company and using lots of different metrics, they tend to come out better against all the sort of like peer and the bigger miners. So, put Hive Digital against CleanSpark, against Marathon, against Riot, against Cypher, against these miners, and against TeraWulf. And in terms of valuation from price to book or value per terahash, they come out really well. They don't pay themselves massive salaries like some of the other miners do there. So they do manage their G&A costs and their operating costs. Their energy cost isn't the lowest across the board. So I think they're about about 4.8 cents a kilowatt hour. And probably some of that's down to being in Sweden, where there are issues there with taxation and energy rates. Maybe that's something they address going forward, because we know that mining machines can move when things get challenging there. So maybe we get some more updates on that there. But what they do is on a small scale, they do quite well. But I think I can understand shareholders. Last couple of years, it's been a bit depressed, the stock price. But maybe we're starting to see, if they can get to that target by the end of the year and grow that HPC business quicker than they're planning to, which looks like they are. I mean, they're already sort of like 70% of where they need to be by the end of the year in April. So if they can get that growth in there, that brings another nice revenue stream into the place. And that's guaranteed revenue streams. That's not like we have to hope the Bitcoin price is this rate, there's a halving. No halving in HPC, no Bitcoin price. You get paid for what you provide. And the actual energy to manage HPC is significantly less. So, likes of Bit Digital, 3 megawatts to provide 50 million of annualized revenue.
Well, and let's talk about Bit Digital, Anthony. We just got a question about that.
Yeah.
Just as we transition there, this question I just saw on Neptune Digital Assets. I've actually covered Neptune a couple times under the McNallie Money banner on my channel, Barry. So go check those videos out. Neptune is not one that we cover under Power Mining, but definitely one we keep an eye on. Now, interestingly enough, Anthony, as you're talking about Bit Digital, we just got a question about Q1. So we actually have Sam Tabar booked on for May 21st to come on and talk about Q1. They're actually one of the later miners that we have scheduled on. I don't believe they came out with Q1 today, but perhaps I'm wrong as well, Anthony. I don't know if you saw anything. I just looked on their news feed. I don't believe they reported today. But you talk about their HPC business and the strength of that customer and that announcement and the upsizing. Not to mention they've got all their Ethereum staking, that flywheel business model that Sam Tabar talked about in our interview. I know you're a fan of Bit Digital. What is it about this miner that's so appealing?
One of the issues is it doesn't get a lot of hype from anywhere because in terms of Bitcoin mining, it is one of the smallest Bitcoin miners. It's got a hash rate of about 2.8 exahash, hoping to grow that to 6 by the end of the year. So they're hoping to more than double where they are at the moment. And bear in mind, they've grown even since the start of 2024. They've added mining machines, in February and March to grow that to there about half an exahash. So they've got ambitious plans in growth for Bitcoin this year. But to be honest with you, it's the growth in HPC that sort of is one of my highlights. And if you go back to November when they started talking about HPC, they waited to announce their move into HPC until they got a client. So a lot of other miners have said, we're going to set aside facilities, we're going to build these facilities, we're going to add power to that facility, we're going to buy some GPUs, and we're going to start discussing with potential clients. Well, Bit Digital did it the way around. They did everything and got the client first, and then started to tell the market what they were doing. So when they announced their first client, it was for a 35 million annualized revenue stream. And as we know, literally within a month of that announcement, they'd increased it to 50 million. And when Sam came on the podcast, the last time he came on the podcast, it was to announce that 50 million is out of date as well. And they're looking now to increase their capacity to double where they are at the moment, and they'll have 100 million HPC contract by the end of the year. And so, if that's not looking, it gives them some sort of highlight, and I don't know what is. I mean, bear in mind the market capitalization can't be more than 200 million at the moment, and so you've got a company that only mined $43 million of Bitcoin last year. And I've got a contract this year that will bring in a minimum of 50 million and potentially a lot more if that capacity is achieved before the end of the year. So we can see from their updates at the moment, so the January, February and March updates that they produce, as well as producing their Bitcoin production and the money that they make from staking their Ethereum, they've got one of the highest hodls of Ethereum on any public miner's balance sheet, about 16,000, and they're using that to stake, and they get rewards on the staking. So that increases. That's another, potentially $150,000 a month in revenue from that business. And then they've got the HPC. Well, they've put the HPC revenues on each of the updates. I think in January, because it was only the last week of January, it was $1 million. And then we look at February and March, where it's the normal full month, and it's 4.3 million of income, which is annualized 50 million. It's exactly what Sam said. So, I'm inclined to, if he says he's going to 100 million, they're going to 100 million. He's got no reason to discount that, because he's said exactly what he's said for the last 6 months. It's just that the rest of the market doesn't seem to be listening to, the updates. And we can put out an update and then we get accused of being, hyping it. And it's, we're just putting out what's said there. But he's delivering what he's saying he's delivering. If anyone can say any other than that. From a Bitcoin mining perspective, they are, they rely on a host facility. So again, they're like, in terms of mining, it's more attuned to what Marathon Digital were doing previously. And when I say still doing half their businesses, in fact, nearly all their business is still asset light because they haven't took control of these facilities yet. They will start taking control, and it will start changing over. But Bit Digital, they use hosted facilities. They've even got a lease for their facility in Iceland, which they use for the HPC, and they've leased the GPUs. So they've got a model that works on effectively like on margins. And so, their energy and hosting fee is slightly higher than some of these miners are paying in energy alone. I think it's probably it was last time it was quite about 6.5 cents a kilowatt hour. But bear in mind, you don't need all the staffing costs, all these operational costs that go along with that, and they add up. We had it's interesting. We had when Rob Chan came on and sort of explained. Rob was the CFO of Riot Platform. A number of years ago. So he's been in the space for quite a long time. And before that, he worked, in the big finance companies there in sort of like, in the gold, in markets and all that. So he understands how all these metrics work. And, people are very quick to say about hosting, if it's done well, and actually you've got good relationships there, and you can keep your uptime up there, it can be a good move for miners because you're not having to go out there and spend. 2 years ago, Marathon had 15 staff. I think now they're up to like probably over 50 staff, and that will grow significantly once they've took over these two facilities and they buy more facilities. But Griffin Mining have 3 staff. I don't know how many staff are at Bit Digital, but it won't be that many. It won't be that many because they're paying for a service, and so that couple of cents that they're paying per kilowatt hour takes away all that responsibility. Don't have to pay sickness, don't have to pay travel, don't have to pay bonuses. It can work out quite well. So I think that they'll have a good Q1 earnings. All these miners should be green in Q1 because of the fact the Bitcoin price and the fact is, if they've got a hodl, and we know that Bit Digital have got a decent hodl, they've got bigger hodl than Bitfarms. It's over 100 million if you add up the Ethereum and the Bitcoin together, and then they've got cash on top of that. So I think it's about 150 million in the treasury. Their market capitalization isn't that much more than that. So from a valuation perspective, I'm going to do some analysis this maybe next week and have a look at that and compare how Bit Digital looks to some of the other miners from some of those metrics, but they'll come out really well.
Yeah, I look forward to that. And this question here about Bitfarms, we did cover Bitfarms earlier, but I wanted to talk about this synthetic hodl. I hope that's what you're talking about in terms of leverage here. But before we do get into that one, Anthony, what I was going to say, you guys, and the more I listen to your comments, Anthony, about Riot, about Bitfarms, about Hive, companies that have been doing the right things. The metrics look good. They're creating more and more revenue month over month, but the share price just isn't responding. What I've really learned in the investment world over the last few years, I've been doing this about 12 years. The investment community likes to go ditch to ditch. Either everything is perfect and glistening and great. Think of Tesla, right? The glory days, or it's not and everything's terrible. That's really what we saw in the Bitcoin market over the last bull bear cycle, right? In the bear cycle, there was all the Sam Bankman issues, the collapses of all the exchanges, uncertainty with where the future of Bitcoin was going. We saw the pullback in price. We saw the miner margins get compressed. We were completely bear sentiment. Now we've swung to bull. But you'll still find, even though the sector itself is generally uptrending, you've got companies in here, Anthony, like the ones we just talked about, the Huts, the Bitfarms, the Riots, that are on their own little mini ditch to ditch cycle, right? And that's where the opportunities here, I think, are, you guys, is if you're in the right sector, but there's some short-term fear, uncertainty, doubt with a few of these players, that may be where opportunity is presenting itself. So I wanted to bring that up because we've seen a lot of comments and questions, a 5%, 10% pullback in Bitcoin, 15%, 20% in the miners. People who haven't been through this cycle, they're just not used to that volatility. Maybe we can get your thoughts on volatility for a sec here, Anthony, and then we'll move into that Bitfarm leverage play.
Yeah, I mean, I've been in the space, 4 years now, and so you've seen some, these stocks are not for the faint-hearted. The Bitcoin price is volatile, but it has a volatility where it will move anywhere up to about 5% in a day. And on a bad day, it can be down 5%. On a good day, it can be up 5%. Not much more than that. There occasionally when it breaks that, but generally, 2 or 3% is a movement. For mining companies, that's a different ball game. We can see mining stocks, and we've seen even in the last couple of weeks, there's been some of the mining stocks have been up 30% in a day, and that appeals to certain types of investors. And I'm sure the people that are listening here now have seen, but it's having that ability to see where the value is in the mining companies, and I don't look at the technical analysis. There's a place for that, and I don't want to detract from what these people do with the graphs, and they've got something there. But I look at the fundamental analysis, look at how the companies have performed. Everything's historic. People are saying like, what if the Bitcoin price is, what will the price be? There's so many variable factors out there. Some of these analysts that put these prices out there, that what's going to happen in 12 months' time, we need to make a note of those and go back in 12 months' time and see how close they were to those prices and see if they were there. It's interesting. I did an analysis with the likes of Sebastian, with Curtis from Empire Building, with Tom from Talking Investing, and from Jane from Invest Answers. And I'm quite happy where I finished. We all selected a number of miners, and I'm quite happy where I finished in 2023 on picking the 5 miners I did, because 3 of them were the top 3 miners for that particular year. So but I don't do. I look at the value there. I look at what the growth is in the company, and are they efficiently run? Have they got efficient mining machines? Have they got low cost energy? Those are the factors I look at. Having a good solid management team who can make the right decisions. Some people come into this space and they haven't had that sort of experience in all the attributes that you need to run these types of companies, and they've been found out. I mean, we've seen some of these CEOs who are great at sort of talking the talk, but when it came to sort of really doing what they need to do, they didn't last, and so they've gone by the wayside. But there are still some good people out on the ground there. We mentioned Ben from Bitfarms there. That you've got a good chief mining officer when every other company wants them to be in their company. So, he'd have no shortage of job offers if he ever thought about leaving Bitfarms. I'm sure he gets a job offer for every month in the post anyway. But, and then you've got, other good teams around there. I mean, I like the team. I mean, no one can argue with the team at TeraWulf, and how they go about business there. Yeah, they've got the debt on the balance sheet, but people need to realise those directors own 40% of the company, and I'm sure they've owned some of that debt as well. So that ain't going down. That's they're elements that are within their they're within their own management. Is it manageable? Of course it's manageable, because they can manage it. It's within their purview how they want to deal with it. And I've been very positive. And when I asked about Patrick Fleury as a CFO there, how he was regarded by other mining companies in this space as being an exceptional addition to the team at TeraWulf, like that. So you've got strong people when other people want those key personnel in their teams, and they rate them like that.
Oh, totally.
I spoke to 7 senior execs in October, and they were telling me about Core Scientific and the way that Adam had gone into there. And Adam again had a respected background, and every time you hear Adam speak about the company, he articulates everything really well. He's very open, very transparent. They're doing exactly what they said on the tin. They've been through Chapter 11. They've come out of Chapter 11. They're still intact. A lot of companies going to Chapter 11 don't come out. End up coming out in bits and pieces, Well,
Anthony, what's interesting, you mentioned there other CEOs talking about cores. A lot of these high-level executive C-suites, they're in lockup periods, right? So they can't trade their own stock, but a lot of them are actually trading Core Scientific and buying shares.
Yeah.
So that was super interesting. Now, Private has been asking a number of questions about Bitfarms, a synthetic HODL, their significant leverage play here, Anthony. So I thought we'll get into this one for you, Private, and appreciate your patience. So we did talk about Bitfarms earlier, our outlook on the CEO swap and the potential ban in Paraguay. both of which we feel are non-issues for the company. But you're talking about the leverage and the position of Bitfarms compared to the spot ETF. Now, Bitfarms is unique in the sense that they've got a synthetic HODL as part of their strategy. So we did talk to Ben about this a little bit. It sounds essentially like long-dated call options on Bitcoin over 12 months out. It did sound like they had staggered expiration dates. But what this does is it allows them to get a leveraged proxy on the price of Bitcoin moving without having to have a significant amount of money tied up in terms of a HODL or sitting on their balance sheet in terms of Bitcoin. So this one will be super interesting to watch. Private, I guess it would definitely depend on the price of Bitcoin and how far that comes along here in the foreseeable future. But I would expect if we do see a large run in the price of Bitcoin itself, obviously these long dated call options are going to stand to benefit Bitfarms in a big way. Now, Anthony, I'm seeing your camera is turned off here. Are you still with us on the audio?
I can still hear you. Yeah.
Okay, great. So before we lose connection here fully, maybe we'll wrap it up today. We've been over an hour, so we wanted to kind of shoot for the 1 hour time limit. You guys, we're going to try and have a regular live stream every Wednesday on the channel. So if you want to tune into that, we'd really appreciate you coming. 10 a.m. Mountain Time is what we had scheduled, but we're open to whatever works best for the community here. So make sure you let us know in the comment section. And if you've been with us throughout the presentation today, hopefully you like the live stream format. This is definitely something we're working through the kinks. We're not as technically savvy as maybe Tom's son is or Sebastian out there, but we're doing our best and we think we're finding a way to get through it. If you're still with us here, though, make sure you hit the like button, you guys. We really appreciate it. Leave your comments in the section below. We'll get to them in our next live stream. And have a great rest of your day, guys. Thanks so much for joining.